Hello viewers, it's CN on now once again today, and you are watching CN Great Counsels and Forex Trades. In today's video, I'm going to be telling you a few things as a general guideline about stop loss in Forex market in general and how it applies to boom and crash in particular. This is because the way stop loss work on currency pairs, Nasdaq, volatility step index, and a few other pairs is slightly different from the way it works on boom and crash. That is talking about boom 500, boom 1000, crash 500, and crash 1000. You see, I've always told you guys that it's not only profitable strategies that you need to be a successful trader. There are a few other things you need, a few other expositions that would also enhance your trading. I'm going to be taking a live trade at the end of this video and then show you the place and how to place a stop loss order for those of you who do not know where and how to do that. Okay, but before then, here are my general guidelines for putting stop loss on boom and crash. Firstly, placing stop loss does not necessarily mean you won't have losses. Okay, it all depends on a few other things. And as a trader, you should always think of ways to limit your losses, and placing a stop loss is one important way to do so. Okay, but on boom and crash, the placement of stop loss is basically to prevent massive losses and not necessarily to bar slippage of losses. Now, here is what I mean. On currency pairs, volatilities, okay, volatility index, Nasdaq, and a few other trading pairs, you can see the zigzag, the upward or downward movement of the market. And when you place a stop loss, your losses, when the stop loss is hit, does not slip over that position of the stop loss. Okay, however, on boom and crash, the reverse is the case, depending on the size or length of the spike that hits your stop loss. Okay, it can either put you in deep loss or small loss, but in all, it must slip over the position of your stop loss. Okay, now the second guideline, you can only use stop loss on boom and crash on two major grounds. Okay, first is to prevent massive loss, like I earlier said, in case of a pullback after taking a trade position. Second is to protect or lock up your profits when you are already in deep profit. Okay, which of course does not completely prevent losses, as some of you may think, but that way, when it spikes or crashes, if you're already in deep profit, a chunk of your profit is either caught by the spike, leaving you in smaller loss, or in smaller profits, or leaving you in losses if the spike is so long that the slippage is enough to take all your profits. Okay, then guideline number 3, as much as you'd like it to, okay, the market or price may not always go the direction you expect or desire immediately you place your trade, which is why when you place your trades and you want to place a stop loss order, you must have to give the trade a bit of space in case of any pullback before it starts going your direction. And as a rule of thumb, you place a stop loss below a recent swing low, that is for crash, when you buy on crash. Okay, in that case, if the price moves below that low, okay, then you may probably be wrong about the direction of the market. However, this choice of where to place stop loss may vary depending on your strategy. Also, you place a stop loss above a recent swing high, that is above a spike, when you sell on boom. In that case, if market or price goes above that point, then you may probably conclude that you were wrong about the direction of the market. Now, the point here is that stop loss are strategically placed, and a good one is the one placed at a location such that if eventually hit, would let you know you were wrong about the direction of the market, depending on your strategy and time frame. Please, you can check in the description box to watch my videos on how to identify trends. Then you also see how to identify swing lows and swing highs. Okay, now guideline number 4. Okay, stop losses are not bulletproofs, as some of you might think. Okay, they are not bulletproofs. Okay, they're not bulletproof. Some traders call me or chat me up on Telegram and on WhatsApp telling me that stop loss does not work on boom and crash. Maybe their expectations is that, as the name implies, stop loss, they are not supposed to have losses at all after placing stop loss. No way. It does not work that way, especially on boom and crash, which is why I am releasing this video to give this general guideline to address the mind of certain traders in that category. Okay, now stop losses are not bulletproofs, rather they are a part of exit plan and a crucial offsetting order that exits your trades automatically once a certain price level going against your trade is reached. Okay, so how do you calculate your stop loss position? Okay, how do you know where to place your stop loss? We've said part of that already, but then you may not necessarily need a formal or a form of formal arithmetic in doing this, but you can calculate where to put your stop loss on boom and crash based on your knowledge of the following. Number 1, your risk and reward ratio. You must have a good knowledge of risk and reward ratio. That is talking about the amount of or fraction of your account size you are willing to risk in order to make a certain profit. And as a standard, we have this range of risk to reward ratio in a descending order of preference. Okay, we have 1:0, 1:1, 1:2, and 1:2 above 2. Okay, other things you may want to consider when placing your stop loss orders includes your account size and position lot size, your knowledge of pip values of the number of candlesticks you wish to take on boom and crash, your strategy, of course, and trading styles, which is why you may also have to refer to some of my videos on these topics in the description box below to see how those can be obtained. And of course, you are going to see I did the video already on how to identify trends and trading styles, whether you are to swing or to scalp. That is all you need to do. But as for today's video, let me quickly take a trade right now and show you where and how to place your stop loss order for those of you who do not know how to do so. I'm going to look for a position or a condition for us to take trade, and then we'll call it a day for today. All right, guys, we're going to take a trade now and then take 5 candlesticks. At the introduction of the next candlestick, we're going to take trade. Okay, all right, okay, yeah, so we are taking these trades and then we are closing it at 5 candlesticks. So here is where and how to place your stop loss. When I talked about low or swing low, this is crash, this is a crash, and this is a low point. Okay, remember, this is just for the sake of this video. Okay, you don't have to take risk like this. So you place your stop loss below a spike like this. Okay, and I talked about swing low and swing highs. You can check in the description box to watch my video on how to identify that, but here is where you place your stop loss. You can either check for where to place your stop loss when you are placing an order, like maybe you want to place an order, okay, and then you go to this place where you want to maybe place a buy or a sell, okay, but that's more like a harder way. You can just choose to do it this way, okay, then you click on the pencil icon and then you touch this SL and you place your stop loss, okay, but then you have to note the price at the position where you want to place your stop loss, okay. Now let's say we are using the black line and the number corresponding to it, which is 11570, okay, 11571.2229, 11571.2229, okay. So 11571.2229, okay. You do it this way, then you will see the line, okay. This is our stop loss now, okay. I hope that is taken. And still using our our method of calculating pip values. The other day already I have compiled pip values, okay, pip values, but then we are not gonna use it. We are just gonna take 5 candlesticks and then we'll close, okay. So that is where to place your stop loss. And please, many thanks for watching this video, guys, but I'd like you to expect the third and final part of the trade more strategy series next week, okay. It's going to be powerful as there is a bit change in indicators that are used for it, okay. And it's really gonna be trade more, okay, and we're gonna trade more profitably with this strategy. Don't forget to share this video, give it a thumbs up, like, leave your comment in the comment section below, and then I'll see you in my next video. Love you guys. Bye.